What's up, traders? It is Professor Spunny back with another video for the Mastering Stock Chart Analysis series. For this video, we're going to be learning how to identify trends and plotting trend lines. So, first, we're going to read through some things and then we'll put it into view looking at a chart. So, to start, what is a trend? A trend is the overall direction of a market or an asset's price. In technical analysis, trends are identified by trend lines or price action that highlight when the price is making higher swing highs and higher swing lows for an uptrend, or lower swing lows and lower swing highs for a downtrend. So for an uptrend, uptrends are marked by rising data points such as higher swing highs and higher swing lows. An uptrend is marked by an overall increase in price. Nothing moves straight up for long, so there will always be oscillation, but the overall direction needs to be higher in order for it to be considered an uptrend. Recent swing lows should be above prior swing lows, and the same goes for swing highs. So that is an uptrend. Next, we have a downtrend. Downtrends are marked by falling data points such as lower swing lows and lower swing highs. So, how do we as traders identify a trend? Traders can identify a trend using various forms of technical analysis, including trend lines, price action, and technical indicators. So, one technical indicator that we can use would be simple moving averages. Trend lines is another good option, and also just price action, which we'll learn when we look at the chart. So, trend lines. A common way to identify trends is using trend lines, which connect a series of highs for downtrends or lows for uptrend. Uptrends connect a series of higher lows, creating a support level for future price movements. Downtrends connect a series of lower highs, creating a resistance level for future price movements. In addition to support and resistance, these trend lines show the overall direction of the trend. A trend line should be connected by at least 3 highs or lows to make it valid. And this is very important. We'll highlight this in red. Repeat this. A trend line should be connected by at least 3 highs or lows to make it valid. The more times the price touches the trend line, the more valid it is. Trend lines can be used as support or resistance, in which case you can enter trades when the price touches the trend lines. So now that we have read over some basics to identifying trends, what an uptrend is, what a downtrend is, we will take a look at a chart and put this into perspective. So here we will look at DXY. First, we can take a look at identifying an uptrend. So here we're using 50 MA, 100 EMA, or 100 MA, and a 200 MA. And that just means moving averages. So when price is trading above your moving averages, you are in an uptrend. So as we can see here, so we can say a higher high, a lower low, a higher high, a lower or a higher low, and a higher high and a higher low. So that's definitely an uptrend. Here we can see recently prices actually went below the moving averages, so it's actually starting to go into a downtrend. That's identifying an uptrend and a downtrend. So now we can use some trend lines. So when you're identifying a trend, remember you want at least 2 to 3, good points that the trend line actually touches. So here we can see we don't actually need to make it that long. So if we would have drawn this trend line maybe when price touched here, we would know 1, 2, 3. So we would say, okay, that's a pretty valid trend line. So maybe this uptrend is reversing into a downtrend. And what we would have done if we were trading this is you can take a short from this resistance of the top of the trend line, and we would short it, and then we'd see, okay, we have this bottom trend line that's supposed to be for support, and we would say, okay, it broke it. So we definitely know it's bearish, meaning it's going downward. And as we can see, it actually kind of flew into a downtrend. So that is pretty much the basics for uh, determining trends, using trend lines, using price action. Price action meaning identifying these higher highs and higher lows, or lower highs and lower lows. So you can see lower high, lower low, lower high, lower low. So that would be considered going into a downtrend. And if we want to test out another trend line, maybe we can do this one. You just gotta get good at having an eye for these sort of trend lines that you can spot on charts. So as we can see here, let's actually move this. So we have lots of touches to this bottom support trend line. And when price came in here pretty recently, a couple of days ago, it actually bounced off that trend line, and it's now rallied, about 2% just using trend lines. So that's pretty neat. But this is it for this video. Another simple video in the Mastering Stock Chart Analysis series. And I'll catch you guys in the next one.